Markets were down on Wednesday as the latest round of US-China talks on their bruising year-long trade war came to an end in Shanghai. Washington and Beijing have so far hit each other with punitive tariffs covering more than $360 billion in two-way trade. US trade representative authorities finished their two-day talks with their counterparts in China's financial capital yesterday. The talks were relatively brief and the Washington delegation left for the airport earlier than expected without speaking to reporters. Tokyo's Nikkei lost around 1% to end at 21,521 points. The Hang Seng down 1.3% to end at 27,777. Shanghai Composite Index down 0.7% to end at 2,932 points. Wall Street stocks fell early on Tuesday, buffeted by renewed trade war anxiety as US-China talks resumed and as markets awaited a key Federal Reserve decision. US President Donald Trump ripped into China on Twitter after negotiators arrived in Shanghai, denting expectations that the talks will boost the odds of a deal in the near future. Speaking just before the start of a two-day Fed meeting at which the US Central Bank is expected to lower the benchmark interest rates, Trump also said he wants to see a large cut. The Dow Jones Industrial Average was down a touch to 27,198 points, while the S&P 500 lost 0.25% to end at 3,013 points, and the Nasdaq Composite dropped a similar mark to end at 8,273 points. So let's continue getting some market news. We now go to the Johannesburg Stock Exchange. Arabile Gomede is standing by. Very good afternoon to you, Arabile. What's happening in the markets this afternoon?
Yeah. Good afternoon, Nzinga. Well, the market today isn't necessarily in positive territory. Of course, yesterday was actually the worst day since May the 23rd on the JSE, seeing the market there go down to go down by 1.37%. Today, not much of a better day either then, as around 0.4% are lost on the Johannesburg Stock Exchange as well. So some negativity certainly filtering through. One of the key issues, of course, at play has been the trade war between China and the United States. More talks as the likes of Robert Lighthizer, the trade representative, going off to China and having discussions there over 2 days. So far, doesn't seem like any deal has been struck beforehand. It's not as if many had hoped that a deal would be struck at this point in time either. So it's a case of as you were, I suppose, in many instances. And President Donald Trump had also alluded to the fact that China should not be thinking about awaiting the end of President Donald Trump's term before, striking any sort of deal when it comes to that trade situation, because he says if he does win re-election in November 2020, that certainly means that the situation with the trade debacle will be even worse for China, according to him. So perhaps it is in their best interest to get this situation sorted out as soon as possible. There's that. And of course, later today, we get the announcement by the Federal Reserve in the United States about those interest rates, whether they decide to cut by at least 25 basis points as expected. But that's not the only issue. The issue becomes, where exactly do they go from here? What does the rate cycle sort of look like headed throughout the rest of the year? So all those factors will certainly be at play, including the likes of Brexit. But for now, let's unpack those numbers and see exactly what's faring out in Europe and locally. And we'll get into the detail in just a bit. That market picture seemingly not positive as you'd seen there. Even the South African currency pretty much stable really when one considers that it was at 14.18 yesterday against the US dollar, even though we had a slew of bad economic data and even some bad data when it comes to Eskom. Let's unpack all of this now with Viv Govender from Rand Swiss, who joins us here live at the Johannesburg Stock Exchange. Viv, thank you so much for the time. A slight negativity to South Africa's market movement thus far this afternoon, following yesterday's bad trading as well. What exactly has sort of moved the market into such negativity?
And I think we are seeing a couple of international events. The trade issues are obviously negative for us in South Africa as well as globally. We are also seeing, of course, maybe some negativity coming through because of those unemployment figures and so on. That said, I don't think they are too important in terms of how our ratings are at the moment. Quite frankly, 27, 29%. Terrible for the people involved, terrible for us as a country, in terms of the humanity involved. But from a business point of view, it really does make a huge difference to the business case for South Africa. And that's, I think, one of the reasons we've seen the currency being reasonably stable at the moment.
What does that mean, however, for the credit rating, as you mentioned then? That certainly does, following the last 2 weeks, has certainly seemed, quite negative with the amount of data and news that has come out. This just adds to that and surely just means that we get that downgrade more likely than not.
I think more important than the unemployment number is the growth number, which is, I think, quite bad at the moment. I have a basically rule of thumb in South Africa at the moment, where for the last few years, all you do is in December, November, the year before, you just say whatever the estimate for growth for the next year is going to be, cut it in half. Last year it was 1.6, 1.8%. You cut that in half, it was 0.8%. Now we're at 0.7% estimated for the rest of the year. So it's pretty much going on track. And next year the estimates are 1.1%, 1.2%, thereabout. You cut that in half. That's before you even get to the end of the year where these things usually get a bit weaker. So I do think that that number is far more important than the number of unemployed in the country. If we can get growth rates up to say 3, 4, 5%, I think it makes a bigger difference than cutting unemployment down to 20%, even though those two things are linked.
Seems very ambitious, though, to get anywhere near that 3% target right now. What do we do? We've spoken about it so many times, yet we still aren't there.
Well, basically, what we do is you copy people. You want to do better in a test. The easiest way to do it is copy the guy that's smarter that's next to you. You want to do better as the economy. Copy the economies that are doing better than you. You know what I mean?
Yeah.
And that is the thing that I don't think we in South Africa understand, that this is not something that we have to develop from new. We do not figure out everything from scratch. Look at what other people have done that has worked and do that. Other people that have worked are not Venezuela, they're not Russia, they're not Brazil, they're not those countries. Look at the countries that have worked. We need, number one, we need a manufacturing sector, because our unemployed in this country are unemployable in a services and financial economy like we're talking about. Yeah. And they're unemployable given our capital restraints and our training, etc., in an agriculture or mining-based economy as well, in the kind of jobs you want them to have. Yes, they could be out there, plowing the fields, but we don't want that to be the future for the majority of the people that are unemployed.
Exactly.
We want them to progress. The only way to do that is manufacturing. Number two, make it easier to do business. Business in this country is quite difficult to do at the moment. There's just more and more restrictions coming through from government. We need some certainty around things like the mining charter, of course, those kind of things. But more importantly, we need certainty around things like the national health insurance, which at the moment seems to be a very scary thing for many middle-class people. I don't know if you've seen the numbers out there, but right now there's more demand, there's less demand for people buying from outside South Africa than there is from people selling from South Africa and to move overseas. Sure. So there's a net actual negative, demand for housing in this country at the moment. And that's one of the reasons we've seen housing prices under such pressure for the last half a decade or so.
Sure. One may say that it also presents the best opportunity to buy, but when you have nothing to buy it with, that certainly doesn't help the case either. Viv, let's talk about then the United States Fed. They come out later today as well with the prospect of cutting interest rates by at least 25 basis points. President Donald Trump has obviously said we want a larger cut, even though he's not supposed to get involved. What do you think happens? And then what happens with regards to the rest of the year? What does the trajectory look like?
Like, President Donald Trump is like the person that kills his mother and father and goes to the judge and says, be lenient, I'm an orphan. Right? So, because basically he's the one that's caused this kind of slowdown in growth to a certain extent. Yeah. Because he's the one that has this fight with China, which is one of the big reasons that we've seen the slowdown come through. But, at the moment, ignoring that, he's probably right. You probably need to cut rates right now for the US, because the old link was the inflation rate is linked to the unemployment rate. The unemployment rate in the US is at all-time low. He's right about that. Trump is right. It may not be the total cause of it, because it's the same trend we had under Obama, but he's right. Unemployment among every group you see in the US at the moment is at all-time lows. But normally when you see that there, what you'd see is labor power coming into play and people pushing up wages and inflation coming up from that. That isn't happening in the US at the moment. Unemployment is low, inflation is low, and growth is kind of tottering. They should be reasonably okay with actually allowing growth to basically increase by keeping interest rates a bit low for longer, because there's no threat of inflation at the moment in the US. So he's right on that. This is a breaking of what's called the Phillips curve in economics, but not all economics is true for all times. And this could be the case where you don't look at the Phillips curve and you look at what's actually happening in the economy. Lower interest rates. boost the economy up. Maybe we see inflation in the future, but right now it isn't there.
So what is it then that's forcing inflation to remain low in the United States as opposed to headed higher, as you said? Because if you have the kind of unemployment they have, it means that more people are employed, more people are able to make purchases, which means prices should necessarily go higher. Not the case.
Yeah, but the thing with the purchases is that there's certain groups or certain sectors in the economy that are getting more expensive, well beyond inflation. So it's education, it's healthcare, it's housing, those are things that really are getting more expensive in the US, well beyond inflation rates. But I mean, general manufacturing and so on has been really productive. We're talking about really cheap goods and services in America beyond those, special industries. And quite frankly, the linkage between, low unemployment and higher wage demand, to a certain extent, may have been broken due to the fact that the labor situation in the US is very different. There's not much unionization happening at the moment. A lot of gig workers, so people working in part-time and underemployed jobs.
Yeah.
So even though people may have a job, they may not have the job that is best suited to their skill set and their experience, etc. And so these factors may make it less likely that you can see these workers exercising real power to increase wages in the economy.
All right. Let's take the focus onto the equity front just for a little bit as well. Big news, Old Mutual, of course, then may not necessarily be the biggest equity news in terms of market movement, but Peter Moya getting back to the office today, and Old Mutual then, of course, trying to fight it in many ways. What do you make of that whole saga?
I think our labor court situation, our labor law situation is a bit broken. I think there should be a cut-off limit in terms of when you actually are protected by labor law.
Yeah.
If you're a worker on the factory floor, if you're a normal worker in a place like Old Mutual, certainly be protected, have all the protections, have the ability to be reinstated in your job if you're fired, without cause or, in a bad manner, etc. I don't think it should apply to the CEO of a company like Old Mutual, however. Beyond a certain level, the damage a person, or reappointing a person like that, waiting for the due process to go through and so on, could be so great that the harm would be to tens of thousands of jobs, not just one job. Reappointing somebody on the factory floor when he basically was fired in the incorrect reason, that's not going to cause a huge, company-wide dilemma.
Yeah.
If he was treated badly, he was treated incorrectly, get a golden parachute, get a diamond parachute, a platinum parachute, whatever you want to call it here. Give him a massive paycheck. Make the people that basically, did it, pay the fees for him and so on. That's all and fine. But to have a company basically be saddled with a CEO that the board does not want for maybe 2 months, doesn't really make sense. It really does affect the operations of a company like that there. And right now we have a situation at Old Mutual where he's turning up to work and they say, what work can you do? We don't want you to make decisions for the company.
Sure.
How can you make these decisions and what can we expect, who can expect to follow them? So I think that's the real kind of breakdown we have in these kind of cases. Beyond a certain level, a minister, a head of a government department, the person that runs ESCOM, should not have recourse to the CCMA, quite frankly, to be reinstated at the job.
Yeah.
Get paid out a big salary, but not that.
To the job. Wow. Well, it certainly is a saga that we'll continue to see. It does seem that there's a lot of head-butting there, that's for sure. And we'll continue to unpack that one. Unfortunately, we have run out of time. Thank you so much for your time, though, Viv Govender there from Rand Swiss, joining us live here at the Johannesburg Stock Exchange. So down a touch today is the JSE all share. That market, if not doing necessarily too well, 14.22 odd against the US dollar as well is the mark for the currency. For now, that's where the buck stops. My colleague Nzinga will join you right after the short break. Do stay tuned. This is SABC News.